So let's have a look at the second adjustment for V. Leahy for 2023 higher level sole trader question. So what this is saying that goods purchased on credit from a supplier were in transit on the 31st of 12, 2022. So these are goods in transit. So we purchased them. So the invoice for these goods had been received for 15,375, which included VAT at 23%. So no record had been made in the books in respect of this transaction. So we've bought goods, those goods are in transit to us, but we haven't entered them in a book. So what we need to do is we need to adjust our purchases figure, and we need to adjust our creditors figure, and then we need to adjust our closing stock figure. And because it says VAT is included, we need to adjust our VAT. So because VAT is included, we need to separate our purchases and our VAT. So our purchases are going to increase, and are going to increase by the cost price in the question. So we need to find out what is our cost price. So that's where we need to differentiate between our invoice and our VAT. So we need to find the 23% to find out what the VAT is and take that away. Then our creditors are going to increase then by the same amount. Okay, so your purchase is going to be your cost price. If we purchase those goods, that's how much we owe our creditors, so they're going to increase by the same amount. Closing stock is going to increase by the 100%, because that's how much the goods will cost us. And then your VAT then, it depends on where your VAT is in the question. So the VAT here, because on purchase, it's going to decrease our VAT, so we're going to debit our VAT account. So the first thing we need to do is we need to find out what is 100%. So this figure here of 15,375, that's 123%. So 1% is 15,375. Divide that by 123. And that's going to give us 125. So 100% then is 125. Multiply that by 100. So the cost then to us is going to be 12,500. So that means that our purchases has to increase by 12,500 because that's how much they cost us. So if they cost us that amount, then our creditors are going to increase by the figure in the question. Our closing stock then needs to increase by the cost, which is 12,500, and then our VAT then needs to decrease by the difference of the two. So it's going to be 2,875. So if you're doing this in T accounts, what's going to happen is, so my purchases, they're going to go up by 12,500. So remember, purchases are an expense to debit, to increase in expense that goes on the debit side. Creditors then is going to be the total amount, 15,375. And then your VAT then is going to be the difference of the two. So 2,875. So between your purchase and your VAT, those two figures added together, it's going to be the same as the amount of money we owe to our creditors. And then you're going to adjust your closing stock then by this 12,500, because that's how much our closing stock is going up by. And remember, your closing stock would have been touched on as part of adjustment 1, so we need to adjust that figure in adjustment 1. So if you look at these then, so we need to go and find our figure for our purchases. So we look at our trial balance. We look for our purchases figure. They're usually paired off with sales. Not in this question. So purchases is going to be 1,000,000. So 1,193,500. And from that, we're going to take away the goods in transit. So this cost of purchase of 12,500, we're going to take them away from it. We're going to add them on. And that's going to give us our new purchase figure. Then we need to go and find our creditors. So creditors again are taken from the trial balance. So our creditors figure is in with our debtors. We know creditors are going to be on the credit side. So they're going to be 98,600. So we owe an extra 15,000 275, I think that's how much we owe the creditors. So 15,375. So we're going to add those two together then. So that's going to increase my creditors. So we get 113,975. And then we need to adjust our VAT. So our VAT in the question is on the credit side. So that's a liability of 11,900. The VAT that we calculated as part of this adjustment is 2,875. So we need to reduce our VAT liability because we can claim back the VAT on purchases. So our VAT now is 9,025. So that still goes into our current liabilities. If you're doing that with your debits and credits, so your VAT is going to be 11,900. It's on the credit side, so we need to reduce that VAT liability. So we want to debit 2,875. So the difference between the two is going to be your balance. So the difference between the two should be on the debit side. So it's still going to be a VAT liability when we balance it off, because the balance figure is coming down to the credit side. And then the last figure you need to adjust is your workings, or you're working for your closing stock. So we have a working for a closing stock here previously. So the value that we calculate the previous adjustment is 81,150. So our closing stock now is going up by 12,500. That's taken from adjustment 2. So we're going to add those two together. So we're going to get 93,600. That's going to be your new figure for your closing stock. And we know that goes into your trading account. It also goes into your balance sheet as a current asset. So there's a little bit in that second adjustment. Okay, so because VAT is included in it this time, we need to take our VAT out. Usually if it was goods in transit and it didn't have VAT there, you'd be just adjusting your purchasing, your creditors and your closing stock. Your purchasing creditors will be adjusted by the figure in the question. Your closing stock will be adjusted by the 100%. But because we have the VAT here, we need to separate the VAT from our purchases. So the purchases is your cost. Your VAT is whatever the VAT is on that you're paying on the purchases, and your creditors then is the total amount. So remember, purchase and closing stock are always calculated on your cost amount. So first thing we do is find out what the VAT was. So the cost of our goods was at 12,500. That was 100%. Take that away from the figure in the question. That's going to give you your VAT amount. So now we need to increase our purchases by the cost, which is 12,500. Increase our creditors by the total amount, which is 15,375 from the question. Increase our closing stock by the cost, which is 12,500, and adjust your VAT. So we're going to be taking our VAT away. So we're going to be reducing our VAT liability because we can claim that VAT back on purchases. And that's your second adjustment. Remember that this is purchases on credit. If that was sales on credit, it would be the opposite of this adjustment. So that's your second adjustment for V. Leahy 2023 Sole Trader question.